Let's bring in Scott Bauer, CEO of Prosper Trading Academy, who's looking at Netflix. Well, walk me through it, Scott. It's an interesting stock where, even when we get these big comeback days, Netflix doesn't participate so much anymore. I mean, it's slightly ahead of the NASDAQ, but you'd be better off in an NVIDIA, AMD, something like that today.
Well, you just hit the buzzword, avoid. And when I see a stock like this right now that literally is in no man's land from a technical standpoint, and fundamentally there's just so many question marks, I typically avoid it. But when I look at something like that, the approach that I would take, Oliver, if I was going to make a trade on that, is pretty much a non-directional approach and try to take advantage of excessive premium. So that's exactly what I'm doing here. And what I'm doing in Netflix is I'm selling a put spread and a call spread that both expire next week. That's called an iron condor. We've talked about that before. So I'm selling the 165, 160 put spread to the downside. I'm doing that because I'm looking at where the stock kind of bottomed out, looking at that maybe as some support there. I'm also selling the 190, 195 call spread to the upside. Now, that's a little bit within what the market maker expected move is for next week, but I'm not a believer in this overall rally here. So I'm selling both sides here. I'm collecting $2. The maximum that this could ever go to is $5 if the stock blows out to the upside, blows out to the downside. So that's the way I'd approach this. Again, typically I would avoid something like this, but if I find myself in a situation and if I am going to choose to make a trade, this is the way that I would go.
Okay. Interesting. So there's a bunch of different legs to it. Take me through it step by step here, Scott. But I think the strategy is pretty interesting, thinking about the potential for a new style of volatility in Netflix.
Exactly. So essentially to next Friday, 1 week from today, I have a range of 163 to 192 to make money. If the stock closes anywhere in that range by next Friday, I make money. If I'm outside of that range, that's where my risk comes in. I do have upwards of $3 risk on either side to this. So I like that range. When I look at 163 to 192, $30 range, roughly that 17, 18% of the stock value at, it's trading 180 right now. Mm-hmm. I like that. So I'll take my chances with that. Again, I go into this knowing exactly what my maximum pain would be, what my maximum risk would be. And in this environment, I'm really a seller of premium overall until volatility really, kind of normalizes a little bit. And we're getting there. We know the VIX never really topped out. It is still coming down a little bit. I think we're almost at that level where we're going to really start to see a little bit more normalcy in the marketplace. That doesn't mean we're not going to see further drawdowns. Maybe the market rallies from here, but I think volatility has ebbed a little bit.
Okay. So looking at Netflix trading in a range, wow, the times are changing, Scott. I guess that's as emblematic of it as we can get. I will say that it appears that because of the extreme earnings-driven volatility, the stock doesn't move that much. For the last 7 months, it hasn't moved that much between earnings because it appears there's so much uncertainty about the fundamentals.
It has. Yeah, you look at those patterns there, and you can see major consolidation across the curve post earnings.
Yeah, Netflix also, if we recall, from summer 2020 up until fall 2021, it's a stock that went sideways. So it's in its blood, if you will, to get stuck at times. All right, I like it. Thanks, Scott. Interesting trade.
Thank you, Oliver.
You got it. Mr. Bauer, CEO of Prosper Trading Academy, looking for a range in Netflix to profit from.